Tilewa, thank you for joining us today.
Thank you very much. Good afternoon.
Good afternoon. Now, Nigeria's Minister of Industry, Trade and Investment has said that the government is trying to avoid any retaliation, but instead going to focus their energies on focusing on the African Continental Free Trade Area to advance a new export drive. What are your thoughts? I mean, you've seen the response, you've heard the response of the fiscal authorities. What are your thoughts?
Well, I think we don't really export much to America. And 98% of our exports to the United States is oil and gas. And I think oil and gas is exempt. The rest of the exports are probably fertilizer and primary products like cocoa. So we don't really have too much of an impact, or it's not a significant amount of money. The concerns for the Americans is that if Nigeria is going to open up its market to its agricultural commodities and other things, as you know, most of the wheat we import in this country is coming from Canada. And we don't really buy much from the US per se. And we're in a position whereby I think our own position is not that significant for us to be concerned about, and it's not going to make much of an impact in terms of our trade. I think total trade between the United States and Nigeria is about $6 billion. And I think that's it. So I don't really see much of an impact there.
Right, and in terms of the government strategy, according to the minister, the federal government has rolled out a policy, financing and infrastructure measures to help Nigerian businesses adapt. And some of them include expanding alternative export markets outside of the U.S. We know that the Minister of Industry, Trade and Investment said that she has been meeting with the trade ministers of some other countries, including Brazil, China, and even the U.K. Other strategies also include enhancing quality control and traceability of Nigerian goods, and of course strengthening trade diplomacy to secure favorable terms. I mean, I've heard some other analysts say the U.S. economy isn't the only economy in town, if you will, and that there's always an opportunity to expand to other markets. So as we consider our options, what do you think of this strategy?
Well, like I said before, if you take a look at the top 10 destinations or top 10 trading partners, I think the U.S. will be in the bottom of that list. Our biggest trading partners are China and India. And a lot of our exports, especially with our oil and gas products, are going to India. And most of a significant amount of our imports are coming from China. So in terms of Nigeria, like I've said earlier, I don't know about other African countries, but most of the trade we do is not with America, but with China and India. So that's where the focus is. And I think for Africans as a whole, it's time for us to take a look at this settlement system that the Afro-Exim Bank has set up, PAPS, I think it's called. And we need to take a look at this African Continental Free Trade Area and begin to take a look at it seriously. Dangote is already providing products to like 4 or 5 African countries. And I think that we should this should be an opportunity for Africans to begin to look more inwards. Because the key opportunity that the Americans gave to Africa was AGOA, the African Growth Opportunities Act. And not many countries in Africa have benefited from this, especially Nigeria. At the end of the day, AGOA is going to expire later this year, but this executive order that Trump has signed has negated anything that has to do with AGOA. So I think really it's time for us to look inwards, take a look at how we can strengthen the Afro-Exim Bank, strengthen the African Development Bank and other regional development banks, and begin to look inwards and to begin to set up a proper African Continental Free Trade Area. Because, intra-African trade is still less than 2 trillion. And I think only 33% of exports are captured within Africa from African countries. That number needs to increase. Absolutely.
Now, on a broader level, as you know, the additional tariffs on China took effect today. 104% is what China has to contend with as a result of retaliation on the part of China. What are your thoughts on how are you processing the recent events, especially around Brent now coming or trading around $61 per barrel? What are your thoughts in terms of what the end game is here? At what point could we see things settle?
Well, it's not a question about where we see things settle. By the time you put 100% tariff on a country, then that means that there's something wrong with your math in terms of how you're calculating that tariff. By the time you're putting 100% tariff, then you might well ban outright any import of any items from China. And if you do that overnight, it's going to have significant consequences for American industry, for American economy. And the key impact is the fact that a lot of the companies that manufacture in China are American companies. Walmart being one of the biggest companies there that brings in a lot of things from China, that's going to impact those consumers significantly. That means you want to double the price of everything that is coming in from China at the moment. Are you going to be able to pass on all those costs to the consumers? So that means that you're looking at the American economy and, of course, the global economy going into a recession. You've talked about Brent hitting $60 a barrel. So what that means is that the outlook for energy or for production globally, I think, is reducing. So what that is telling you is that people do not think that there's going to be significant demand for oil going forward in terms of what the futures markets are saying. You've seen just on the S&P index alone, about 5 trillion was wiped off that in like 3 days. And of course, the markets are trying to settle to be able to absorb this shock. So I think the declaration of 100% tariff by the US president signals a significant escalation in the trade wars between China and the United States. So what the United States is saying in effect is that they don't want any more Chinese-made goods in America. They're literally banning importation of anything from China into the United States.
What about the World Trade Organization? What would be the role of the WTO at a time like this?
The WTO doesn't have any significant political clout. It's a mediator, and if there was any problem to start with, the US government of Donald Trump should have, in the beginning, engaged the WTO and put its grievances before the WTO. And there are mechanisms within the WTO that would, force the negotiations that the Americans were looking for, and to try to resolve that in a structured manner with trade talks, trade arrangements, and these things will be discussed through the World Trade Organization mechanism. But as you can see, Donald Trump has bypassed that. China has already filed with the WTO some grievances, but of course that process is not going to see the light of day. So as with a lot of these international organizations, the superpowers around the world, like the United States, sometimes decide that their sovereign interest supersedes any international organization. And this is a clear demonstration of what you're seeing at the moment.
And we've talked a lot about the rearrangement, if you will, of the trade world order, not just the trade world order, just the world order in general, but of course at the heart of it also politics and trade. What would emerge from all of this? Because this is just the first year of the Trump presidency, and there's a lot of uncertainty in terms of what is to come. But we know he's very big on these tariffs, owing to his campaign promises. What kind of shape are we seeing the World Trade Order taken? And what would that mean in the next 5 years? Could we see it becoming a permanent feature?
Well, the United States has a GDP of over $22 trillion. And it's squabbling over a trade deficit of $900 billion. I still do not get that logic in my mind. Because United States exports about just over $3 trillion worth of goods, and it imports about $4 trillion, leaving it with a deficit of about $920 billion. $920 billion is equivalent of the revenues of Amazon and Apple combined. So I'm very, very concerned that a country, a superpower, will begin to squabble with over $22 trillion in GDP of output, get itself concerned about a $900 billion trade deficit. Is it not that trade deficit that is driving your $25 trillion output? I think that's something you should consider. But the consequences are clear. They're very clear. I think we're going to head for a global recession. The Federal Reserve Bank in the US is watching this very carefully. You're seeing how the US and the global stock markets are reacting. And eventually, I think there's no doubt that this is going to trigger a recession, especially with the way the oil prices are tanking. So I think by this third quarter of this year, the global economy might be clearly in a recession.
And if that happens, what does that mean for us in terms of what our monetary policy response could be?
In Nigeria, this doesn't really affect us. The issues we have at hand, the only commodity we have that is global is the oil prices. And I think that if we can continue to establish recovery with our production, then I think we'll be fine. The problem of Nigeria is not oil price. The problem of Nigeria is restoring its oil production to optimal levels. So Nigeria needs to continue to make its investment in its oil and gas industry and improve its production to about 2.5 million barrels a day. At that point, you become comfortable. So even if oil prices fall to 50 and you're producing in excess of 2 million barrels a day, then at least you can see some revenue, and then you cut your code according to the size. But what this means is clearly that the African Continental Free Trade Area should be a priority, not only for Nigeria, but for all the other African countries. It's time to look inwards.
Yeah, but the challenge is we haven't seen in recent time production levels up to 2.2, 2.4 million barrels per day. So what happens if the government is unable to achieve this target? Does this mean more borrowing domestically?
No, I don't think oil prices as it is the impact on borrowing. Borrowing is a different issue in terms of how, if you take a look at the correlation between oil prices or oil production and government borrowing, that has only been recent in the last, I'll say, 6 or 7 years. So I think the investment has been made. We have a new board and management at the NNPC, which is inspiring a lot of confidence because you have some industry technocrats and professionals. And if they make the right decisions, and I think we could see the significant recovery in the Nigerian oil industry, at least this year, to at least sustain it close to about 1.8 million barrels. So in terms of the optics from the new management at the National Petroleum Corporation, we can expect that within a year they should be able to hit about between 1.8 to 2 million barrels in production.
Now, as a country, what lessons can we take away from all that's happening? Yes, Nigeria has benefited from the Africa Growth and Opportunity Act, but the continent as a whole, maybe not. But what should we take away?
Nigeria hasn't, let me correct that, Nigeria has not benefited from AGOA. Like I said earlier, 98% of our exports to the United States is oil and gas, and the next level is fertilizer. We haven't really putting any effort into AGOA, despite the fact that we've qualified. I can't really name 20 companies in Nigeria that will suffer from the increase in tariffs to 14%. Very, very, very few. So that is something that we haven't benefited from. And I think that it is clear that our trade with America is very technical. What we tend to buy from America are gas-powered turbines, power plants, aircraft, like all the Boeing aircrafts that you see that we run in our fleet domestically, and very high technology. Nigeria imports a lot of things from Microsoft, Apple, Google. Those are the sort of high-tech services that we normally tend to use from America, which is available globally. And in the oil and gas industry, American companies tend to supply a lot of turbines and a lot of technical equipment. So, but that is really high-tech and high equipment that we really get from the States. And in return, I think what we really do is oil. So America is not a big trading partner like China or India. And even in Europe now, the biggest trading aspect from Europe used to be petroleum products. But now with Dangote refinery, our trade with Europe is going to shrink significantly because we're no longer importing petroleum products. So what it means is that our own trade is shifted already from the west to the east. And what it means is that we need to continue to work with everybody around the world We get the best from America, we get the best from the China, and we get the best from India, and we get the best from Europe. And let's use it to make the best for ourselves, not only in Nigeria, but within the African continent.
Right, absolutely. Tilewa, thank you so much for your time today. We appreciate your insights. Tilewa Adebajo, CEO of the CFG Advisory.